Welcome to Bears in Exile. Today is November 29th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. So, we had a pretty tame day after our rocket up yesterday. Plenty to look at. Here we are with the Dow. We have an inverse hammer. Not exactly a great candle to have following this huge candle, but nonetheless it is what it is. We did meet the uptick target today, roundabout. Yeah, maybe it's a hair short of it, but nonetheless I think that it's pretty darn close. So yeah, I mean that's right at it. So I'm just going to say that was met. Hey, normally it takes 4 days, and this time it only took one, really. So that's nice. I would like to see some more. It would be nice to see the real body of the candle actually kiss the long-term moving averages, but maybe we won't get that. Who knows? Beyond that, 14-day RSI moving average still marching on down. We have a little bit of a trajectory change after our big move, but nonetheless, even with this huge move, just goes to show you how strong 14-day RSI is. Takes a lot to change it. So still pointing down. CCI ticking up, stochastics ticking up, RSI ticking down, uptick on the histogram, side tick on the MACD. So just by the indicators, it would appear that we have more to the upside potentially, but that 14-day RSI should put a damper on too much of it, too much of a good thing. So a actual kiss of the long-term moving averages, that is about as much as I'm hoping for at this point. We are still above the major price consensus level. We still have the middle Bollinger Band above the short-term moving averages. So kiss of the long-term moving averages, that's about all that I'm hoping for at the moment. But we may already reverse here pretty darn soon, so hopefully not, but regardless. Now going to the 60-minute, just trying to get a feel for better feel of what I'm talking about. Okay, we have a bearish engulfing at the end of the day with the 60-minute. You can see that we're having crossover of the middle Bollinger Band through the short-term moving averages. We have a bearish bar still in full effect, and we have stalled out right at the top of the bar. Not a great sign, not the end of the world. I mean, this could be a little consolidation move, stair-stepping. You can see that here, stair, see that here, stair. You can see that here, a stair, although it was kind of surprising to the upside instead of further to the downside. So the bulls are not done yet. Oh no, they're not done yet, but that's not to say that it's also a done deal. So looking at this, yeah, there's some cause for concern. You can see the excessive separation of the short-term moving averages right here today on the 60-minute time frame. You can see that it did get a downtick and did a corrective move. Is that going to be enough to actually satisfy itself and head on up? It's anyone's guess. But we did hit 1.34 on the euro overnight, which was crazy, and had it held, I mean, potentially we could have had another day like yesterday, today. That did not happen. It got back down to 1.32, but 1.44. Wow, that would have been a crazy move to the upside again. CCI ticking down, stochastics ticking down, 14-day RSI moving average still moving up. You can see that the fast stochastic has already crossed the 14-day RSI moving average in the 60-minute time frame. The question is it going to get all the way to the bottom and have the slow reset in addition to it before turning around and finishing the move up with the 14-day RSI? We don't know. Could turn around here, could go all the way to the bottom. We just don't know. Adding to that, we have the stochastic slipping down. Not a good sign for the bulls, but we could easily have a bearish cross in the MACD and in the histogram, completing the move of the stochastics and before they reset and finish the RSI move. But we shall see. Still too early, but nonetheless, this is not exactly pretty in the 60-minute time frame for the bulls. So something to be aware of and expect. SPX. Ooh, look at that. We have not cleared the major price consensus level. We have not met the uptick target. We have a inverse hammer. 14-day RSI still pointing down, of course. Side tick on the MACD, uptick on the histogram, down tick on the RSI, uptick on the stochastics, uptick on the RSI. Not too much to say about this, except that this is weaker than the Dow. So that is not a good sign for the bulls. Don't like the candles. Don't like 14-day RSI being where it is. The other indicators do have some promise, but nonetheless, it backing away from the upper price or the major price consensus level today is not exactly a great sign. Middle Bollinger Band still above the short-term moving averages. We do not know if we're going to get the bubble corrective move completed or not. 60-minute time frame, just like the Dow. Excessive separation, tries to fix itself, moves up. We are having crossover in the middle Bollinger Band, although it is stalling out right in the middle of the short-term moving averages. 14-day much closer to overbought, not a good sign. Stochastics rolling over with the CCI, RSI going sideways, MACD histogram slanting down, perhaps get the bearish cross. So 60-minute time frame, not friendly, actually worse looking, in my opinion, than the Dow in the 60-minute time frame. Certainly worse than the Dow in the daily time frame. And the VIX. Okay, now this is interesting. We can see on the VIX that yesterday we did barely hold on to the major price consensus level. Today it lost it. It lost it in a big way. And this is not matching up well at all with the Dow or the SPX, which is very interesting. It is holding above the psychologically important $30 mark, but we are back in 30. So that is bad sign. CCI ticking down, stochastics ticking down, slide up tick in the RSI, down tick on the histogram. Looks like a bearish cross about to happen in the MACD. Ooh. So like I said earlier, the bulls are not finished. They still have a few cards to play. Now whether or not that's going to be a winning hand or not, we don't know. But being below the major price consensus level, not a good place to be. Could be a lot worse. If we break below the lower price consensus level, if we close below 30, really bad sign. 14-day RSI is still pointing up. The question really at this point is the stochastics. We have the fast below 14-day RSI moving average. How low are they going to go before they turn around? Are they going to be able to get to the bottom and actually try to flip the 14-day RSI moving average, in which case it would be a lower peak than the previous. So yes, the bulls still have a few cards to play. Tomorrow will be very telling, and with all the Euroland news, you know something's going to happen. TNA did not do so good today. Had a great day yesterday. Ended today with a hammer, a little miniaturized hammer actually. At its true scope, it actually looks more like a little miniaturized spinning top. But it did close inside of the real body of yesterday's candle. We have not met the uptick target. Middle Bollinger Band still above the short-term moving averages. Still holding well above the lower price consensus level. Uptick on the CCI, uptick on the stochastics, down on the 14-day RSI moving average. Its trajectory is changing a little bit. Down tick on the RSI, uptick on the histogram, side tick on the MACD. Not attractive, not the end of the world. It would be great to see a bar retest. Looking at the 60-minute time frame, what do we see? Well, not very good. We see the middle Bollinger Band getting above the short-term moving averages, not a good sign. Bearish bar still in effect in and we do not have great penetration into it really at all. Uh, Very poor sign. Stochastics pointing down, CCI pointing down, histogram sloping down, slight uptick on the MACD, uptick on the RSI gain to overbought, and of course our 14-day RSI moving average still marching up, but a very poor showing. Very poor. UUP. Alright, we finally have a downtick. We have a hammer. We are still above the upper price consensus level. If that were to break, we could assume a bar retest. And you know what? With the downtick, that is entirely feasible. Downtick gives us a target of about 2212. That would not surprise me one bit, as I do think that we will attempt a reversion to mean with the euro at 1.35. We have had our overshoot, and we're waiting for the corrective move back before we can determine if it's going to sink again. But that's my feeling. We shall see. Stochastics very high and rolling over. 14-day RSI moving average still pointing up. We do not know if we're going to get a proper reset of the stochastics, or even if they're going to try and get to the bottom. Certainly the action last night with the 1.34 would be really a big step towards doing that, but CCI very high, ticking down. Histogram rolling over. MACD histogram barely ticking up. CCI ticking sideways, very high. And I do think that a dollar corrective move is going to happen, is likely to happen. But you never know. Never know. FXE. Okay, we have a inverse hammer, almost a gravestone doji. Another one. Does that mean that it's going to gap up tomorrow? We don't know. We have the ever so slightest of upticks at the moment, giving us a target about 134.10, 134.15. We have a little bit of crossover in the middle Bollinger Band, but nothing to really hang your hat on. Uptick on the CCI, stochastics trying to turn up, 14-day RSI moving average still pointing down, downtick on the RSI, uptick on the histogram, downtick on the MACD, still a mixed bag, but you can see, even if we were to ignore the very, very slight uptick today, which we have to blow it way up to see, you can see we have excessive separation, and that is not a good sign. So an up move definitely is probable at this moment, or at least in the next couple of days. That's my read of that situation, and it's going to be entirely dependent upon NDEs of the Euro politicians saving the world. If they can't do it with real news, then they'll do it with fake news. GLD. Nothing really to say with GLD. It is it's exactly where the candle from yesterday was. Essentially going into a double flat line. Middle Bollinger Band is above it still. We're still above the upper price consensus level for 2 days now. Uptick on the CCI, uptick on the stochastics, down on the 14-day RSI moving average. Uptick on the RSI, uptick on the histogram, side tick on the MACD. Not impressive. At least it's above the upper price consensus level. But until it definitively breaks a double flat line, which is what it's heading into, I'll be on the fence, especially with the 14-day RSI moving average ticking down. SLV, not as good as gold. Closed below the major price consensus level. Short-term moving average is pointing down. Middle Bollinger Band line above them. 14-day RSI moving average ticking down. Stochastics pointing down. CCI ticking down. Side tick on the RSI. Uptick on the MACD histogram. Side tick on the MACD. Not a good sign. Bearish bar still in full effect. Not attractive. Well, kind of lackluster tonight. If we look at GE, try to get a little bit of a better read. We have an uptick today. Does not give a great target. About 15.30. Very weak. We do have excessive separation. Uptick on the CCI, stochastics, RSI, MACD histogram, side tick on the MACD. 14-day RSI moving average finally getting pretty low. Doesn't have too much to go until it's oversold. And if that's any indication, maybe we will have a move up in the market in the near future, i.e. a week and a half. And looking at, why not, XOY, oil. And oil is bullish, the market is bullish. Not very impressive, at least it was a green today. Flatlining the long-term moving averages, short-term moving, middle Bollinger Band still above the short-term moving averages. Looks like could be going in for a double flatline. Uptick on the histogram, side tick on the MACD, downtick on the RSI. Stochastics moving up, 14-day RSI moving average moving down, uptick on CCI. So here too, it looks like a move up is entirely possible, but it should be somewhat subdued by the 14-day RSI moving average. Even if it goes into a double flat line, not attractive. Not attractive. But if we were to get a decent day tomorrow or the next day and we have the middle Bollinger Band line get below the short-term moving averages, that definitely could be a changer. Then we will have a very positive sign. Like I said, the bulls still have some cards to play. And if we get a bullish alignment on oil, and we have this previous low, and this is potentially another low, at least for the very short-term time frame, hey, the bulls could even make it to a test of the 200-day moving average once again. Now that would be really interesting, because then we could potentially put in yet another lower high and just have this little stair stepping down too. And that's it for tonight. I wish there was more to say, but it is what it is. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only.